All right, everybody should be able to hear me and see me. Cut on this AI. Let's hit the record button. Cloud, there we go. How's everybody feeling today? How's everybody feeling? By show in the chat, how's everybody feeling? How's everybody feeling? We do have this call being recorded. Good. I'm glad everybody's feeling good today. Really good session today, but want to start this off. 1 second. Drop this in there. We are at So let me go ahead and I see some people saying good, good. I'm glad everybody's feeling well. Today was a good day. Today was a good day, but today is over. Let's just make that clear. Today is over. We move on back to business, and we're gonna start this thing off the right way. Go ahead and share my screen. I appreciate that. Shout out to Von Keith. Shout out to Von Keith, the barber, the artist, excuse me, but he is a barber. Shout out to Javon in here. Shout out to all the barbers that's in the chat. If you're a barber, drop some fires in the chat for yourself. But everybody put Javon's name in there. Javon. Y'all drop Javon, student of the month for a reason. He's an executor, so we're gonna give him his flowers for his consistency. He's been super consistent. So want to give him his flowers here. So this is why I want us to start off the class. Boom, here we go. Want us to go ahead and get this thing kick started. We're back to 0-0, right? So one of the things I always say, you can't get too high off a high, but you also can't get too low off a low. So I know a lot of people is feeling good, especially after today. We caught an amazing drop in the markets, but today's over with. It's time to move on. We're not even going to discuss really too much of today. We're just going to talk about the future and what's next. So this needs to be the mindset of everybody in the chat. I want you to put 0-0 in the chat. That's what I want you to do. I want you to put 0-0 in the chat. 0-0. I want you to put 0-0 in the chat. 0-0 in the chat. Yep. 0-0 in the chat. 0-0. 225 on. Love to see it. 225 people in the building. That means you guys are serious. You guys ready to go. If you're ready to go, put go in the chat. Put go in the chat. If you're ready to go, put go in the chat. If you're ready to go, put go in the chat. You should have your notes ready. We are taking this, like I said, recording. So let's get into it. We ain't gonna waste no more time. Warmed up the right way, and let's jump into it. Let's talk QQQ and numbers. So today, the QQQ closed at 585. So let's also pull up the S&P 500. Right. So a couple core things to discuss and speak about. So now we closed here at 652 here on the SPY. So we're right here at this same level back here from October 6th. Same area as well where we closed here on the QQQ. So what it looks like next, everyone should have the level down 574. So that would mark a correction. If you were to open up your calculator for me real quick and you were to put in all-time high, was right there around 637. You was to times that by 10%, it would give you 63. So you take 637 and you minus that by 63, you should come out with 574. Did everybody come out with that number when you put that in your calculator? 574. Did you come out with that number in your calculator? Let me know if you did. If you came out with 574, let me know. Yep, got some yeses. Perfect. Now what I want you to do, I want you to go ahead and take also as well the SPY, which is going to be 688. I want you to times that by 10%. You should come out with about 68. So 688. All right. So you should have 688 times 10% should come out with 68. So you take 688 and you minus that by 68, you should come out with about 620. So 620 would mark the correction zone for the S&P 500. So you go back here to the July low right here, July, right there in that area. That's where you could look at correction. So put that down. That is considered to be a correction. All right. So that is a correction territory here on. So boom, you look at that there on the SPY. That is the correction. All right. So SPY correction zone is right there at 620. QQQ, we're literally about to hit that correction point right now. So a lot had to do with, of course, funny enough, we still didn't even break 180 on Nvidia. But what did transpire and happen was we finally got to see Apple pull back down. Apple did take a move down. We also saw as well the other semiconductor names started to get cooked. So funny enough, the two names that we were discussing, MU and AMD, both had a bad, I would say a really, really, really rough day. Now, I did not expect and anticipate MU to sell off like this today, but this ultimately is what happens when stocks run up and they go and double within a month. This is what sometimes can happen. Now, when it comes to MU, really quality business. But as you can see, when I cut back on my line, we actually broke down outside of this diagonal trend line. So all week, we have been talking about diagonal trend lines on every single class. The QQQ broke this 598, broke this structure right here from the 15th. So we broke this structure down here on the QQQ. At the same time, MU broke this structure down, which brought it back, and it closed right here at a support level at 201. All right. So MU, when you go to ETF.com and you go ahead and you take a look here at the QQQ, you'll relatively see that MU is right there, right on the outside, looking into the top 10, right? As far as names, when you look at MU, Micron right here, right on the outside. So 1.36%. You also had AMD at 2%, Palantir at 2%, Netflix as well, 2.5%, Meta Platforms. Alphabet tried to hold this thing up, but it couldn't do it. You also have Broadcom, which is still sitting at a high relatively to from where it's at. You also as well have Apple sitting here at 8.7%. Then you have Microsoft at 7.9%, NVIDIA right under here, a little bit underneath 10%. All right. So when you take a look at Micron and AMD, they led the bloodshed today. We caught that early. AMD, we caught it right at 230, right? AMD closed where? Right here at 206 today. Where is AMD breaking? Right now, it just broke this trend line. So now we see AM Dizzle, it's lost its sizzle, right? So we can officially say that AMD has lost its sizzle. Now it's completing this move back to 203. So this is why, like I said, it is important to make sure that you have your levels set on your chart. And let me actually show you AMD on this side to be a little cleaner. There we go. Right. So we broke down below, right? That two. I'll put up a couple of names over here real quick. There we go. Need Coinbase because we're going to get to them here in a second. So let me just go solo dolo real quick here on AMD. So AMD right here at 206, right underneath, is here at 203. But you remember this major gap. Now I want to speak to this, right? Remember, OpenAI deals. AMD only went that high because they said they had a deal with OpenAI. And like I've been saying, we'll come back to test these levels. And this is what happened today. AMD came back to test this level. And now we're looking, if we get underneath, notice there's not much stopping this thing. What does this remind you of? This is when you know your charts. Hold on, Coinbase. We're going to come right back to you, baby. Y'all remember Oracle. I'm just using these inferences so you guys can remember and show you how the trends work. So there's a couple things that I want to show you here. You remember how Oracle gapped up? created this major move up. Remember now how when we broke down on Oracle, right? Currently Oracle's at 210, bingo. 210 was our level. Remember when Oracle broke down below this 271 and it had this massive gap, we ended up filling this gap down there, right? To coming back to 240, 234 and so forth, right here on Oracle. So now Oracle draw down again right here, sitting as well right here at a key support level at 210. So there's going to be a lot of liquidity there. I definitely think that tomorrow you definitely want to be more on the cautious side. If you are looking at, a short, I definitely want to, like I said, I definitely want to make sure that you guys are, staying abreast to everything. So when you look here now, once again, it is super, super, super duper important to watch here at 210 and then as well at 203, right? So just giving you guys an example of last time when we had a stock, for example, break here, it ended up filling the gap very quickly. So do not sleep on potentially here on AMD. We could end up seeing that this stock could actually move down here a lot swifter, right? So like I said, I do want to make that note to you guys here that we could see AMD come down here and move down to 186 very, 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 very quickly, right? So are we on one accord here? Does everybody see that this level? So either it's make or break at 203. It's either money's going to show up or it's not. If money doesn't show up, night. I'm going to tell y'all this right now. AMD is going to be coming back down here to 186. So you can play around with AMD if you want to. But I'm going to tell you this right now. It breaks through 203 and no money comes to save it. It will be going back down to 186 faster than what you know. So I would say that right there, right now. Next thing we want to pull up. Appreciate Oracle for your help. We're going to talk Kano, 2x levered, $16. Oh, man. Christmas came early, guys. December 25th is not even here yet, but Christmas is coming early. So let's talk. Let's look at Coinbase, right? So I want to say this, that the bloodshed is not done here on Coinbase, right? So let me go here on the daily time frame. There we go. So we got on Kano. I told people you don't want to touch this until about maybe $9. $9. So put that down again. $9. You do not want to touch this until we get to $9. So hear me very carefully when I'm stressing this and saying this. No one should touch this till about $9 a share. Scratch 12. Don't even touch it at 12 no more. Coinbase is going to come down here to about 140 to 160. Someone's going to ask, Lawrence, what the main question, which is going to be a great question that somebody's asking, right? How do I know that? Let me give you some insights. So let me break this down. Couple things here on Kano. So let me take the bottom of this trend and let me stretch this all the way across. So we got a diagonal trend line here. We broke right there at where? 275. So we broke that structure here on Coinbase. Now, if you're looking, you'll see, and I've highlighted my levels here. You see that $9.21 on Kano. That is where I want you to take your shot at Kano, which is a 2x levered ETF. So what are you doing? You're making 2 times your money to the upside on Coinbase. Now, I think we all can agree. Do we think Coinbase is a solid company? Most of us will answer yes. If you opened up Coinbase right now, here's the question I'm going to ask you. Does the Coinbase app work any differently than when the stock was at 400 versus the stock being at 230? Is it going to work any differently? It works just fine. At 400, it was opening, working just fine for you. No issues. Here at 238, no issues. The app working just fine. So guess what? There's no difference in this company outside of what? The big domino effect is that people got over leveraged in Bitcoin, and it's causing a lot of liquidations right now. So if BTC goes down to our number at 73,000, right, that we're looking for, we've been talking about it all pretty much all week in the past 3 weeks, right, leading up to this as we were breaking underneath 100,000. Now BTC is showing weakness And we're looking like on BTC that we can pull back a bit further, right? So one thing that I want to say here specifically, right here with Coinbase, 140 to 160 is where price is going. Now, where do I get that? Well, this was the low here from April. So as we're breaking this structure here to the downside, there's not really many levels in between here. You're looking at Kano. And why would I want to wait as long as I can possible before exposing and putting my money into this instrument? So let me explain this and break this down to you. You don't want to get overexposed on this ticker, right? And be holding the bag. Because a lot of times when crypto winter comes around and we see Bitcoin pull back, it doesn't always just go back to an all-time high. It's not like a stock, right? Like Bitcoin's not a stock. So it doesn't just go back to an all-time high very quickly. We could relatively be trading downward on Bitcoin well into next year. And what happens if, that happens, right? Now you see MicroStrategy, Coinbase, these names continue, like I said, they pull back sharper, right? And so Kano, I want you guys to watch Coinbase. Like I said, come down here to maybe 140, 160. That's like your, worst case scenario. So looking at Coinbase, came down here. Today, Kano is giving us $16 a share for ticker Kano, right? The 2x levered ETF. That's what it's giving us. So pretty good, pretty good value, right? Really, 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 really good value there on ticker Kano, right? So wanted to make that note. Kano there. Next ticker, we're going to talk ARKK ETF. This is where, we're getting a little tight here. Let me pull up the ARK and let me pull up good old Palantir. PLTR 148.50, right? So 148.50. Watching Palantir, and we had this conversation about Palantir. Palantir should be underneath $100 realistically compared to what they're earning. Let's talk business model, fundamentals. We got to talk it tonight. We're going to talk that talk. Shout out to everybody being here. This is not going to be able to last. A forward PE of 166. That's where, once again, we take a look at these valuations. Valuations have came back into focus. And so when you think about this, this is the top for Palantir right now, essentially, right? For Palantir, now we're not saying it comes back to $20. I don't think any of us say that. But would you be a buyer of Palantir at these levels? No, like I've been saying over and over again, when it comes to Palantir, no, you would not be a buyer of stock, common stock at these levels on PLTR, right? And relatively, we've shifted very quickly. But this level at 148, I want to make mentions to it, and as well the ARK ETF. At the same time, I'm tying these two things together because the ARK ETF is filled of the most frothiest businesses on Wall Street, right? So the ARK ETF is filled of, once again, the most frothiest businesses on the street. You got your Palantirs in here. You also have AMD as well in here. And you have the most forward price businesses. So people buy stocks off of future profit expectations. That's what I want you guys to write down on your notes tonight. People very rarely are buying equities based upon what they're doing today. They're usually buying equities off of future profit estimations. So they're not buying it off of what it just earned, right, this past quarter or the past 2 quarters or over the TTM, the trailing 12 months. They're usually buying it because of FY 2026 or FY 2027. So the full year guidance of the next couple of years. That's why they're purchasing the tickers. So they're essentially not trying to miss out on the run. When earnings come around and you can't really justify, right, the numbers that you have said, either one, you were going to have and you missed it, or two, people feel, okay, we see the numbers, but we are evaluating where these prices are at, and we don't really agree with where you're priced at currently. So if I told you at Palantir at 207, I could get you Palantir at 125 or $100, you would take it. Palantir with a 50% drop, you would take it, right? Now, what would be the most healthy level, right? What would be your best price scenario? There is no best price on Palantir until about maybe 40 to 50 bucks. Now, that doesn't mean that you should be waiting till 40, $50 because historically tech stocks always trade to somewhat of an overvalued nature. That's just the nature of the beast, right? Tech stocks are future price businesses. They're not old dogs like Caterpillar and JPM, Goldman Sachs that have been doing this a while. And that's why they sit high on the DIA. They're not businesses that have been through storms and proven themselves in the long run. This may be as well, for example, for some companies, this may be their first storm. For CoreWeave, Circle Internet Group, they're brand new companies. So this will be their first storm. Companies that are best able to weather the storm are names like an Apple. When Apple, you have the cash that you have, this is why Apple was down less than 1% today. Notice we have names on this market that was down 10% today. We have names on this market that was down 5% today. Pay attention. AMD was down 7.5%. MU was down 11%. Apple is what we consider to be our benchmark. It was down less than 1% today. Now, why is that? Because Apple can back up. There's no questioning when it comes to Apple. Can they survive? Could they push through a storm? Storms are going to come. The question is can you survive those storms? Right? So the sharpest tickers that were able to, pay attention to the names that were able to stay afloat today, because that showed you where the relative strength was, right? Now, let me go to my next ticker, HOOD, HOD, frothy, right? I want you to put that word down on your notes, frothy. Now, here for Robinhood, it's time to GTS this thing. And what do we mean by GTS? It's time to go to sleep. So let's pull this thing up. We're going to take this trend line from the bottom here, and there we go. Right there. Where did Robinhood close at today? So all I did was take from the low of April 7th, and I drew it right there at a 45-degree angle. So now, where is Robinhood sitting at? Right here at this 106. Remember, Robinhood was supposed to go to 200. 200, boys. 200, boys. You remember? People start speaking in absolutes. Robinhood is supposed to be at $200 a share. Really? Robinhood is supposed to be at $200 a share? Man, oh man. Well, Christmas was canceled for Robinhood. It ain't gonna be at 200 a share no time soon. But let's talk about levels, because once again, we talked about these levels back when the stock was at 130 and 140. This is why you should always, like I said, you should be planning things out. You should have a game plan. Once again, you should be having a game plan on where you want to get the tickers that you have been looking for. So you want to have a game plan, a solid game plan. So Robinhood, right? I would say roughly, like I said before, 60 to 70 bucks. So if Robinhood shaves itself another 30 to 35%, I think it's a pretty good buy, right? I think it's a pretty good buy at those levels. Robinhood down there compared to what they're earning, compared to their past, I think Robinhood would be a steal down there. Around 65, 70 bucks would be an ideal price that you would say, I'll take a crack at it. Your best price on Hood wouldn't come till around 30 to 40 bucks again. That's, just extreme bearish case, right? That's just an extreme bear case. But around 60 to 70 bucks, it'll make sense from a fundamental perspective compared to what they're earning now. So when you take a look at Hood, HOD, right? Robinhood currently with a 48 P to E. Well, 44 P to E. Currently here at 106 would make $2.40 EPS. If I told you that at 150 you could have a shot at getting this ticker at 70, it'd be a really good shot. Now, to get 100 shares at 70 versus 150 is the difference of $8,000. So I want you guys to start looking at that perspective too. I know the goal for a lot of people is, hey, Lawrence, I want to get 100 shares so I can do your cover call strategy. Well, guess what? When the market goes on sale, now the tickers that might have cost you 20,000 for 100 shares or 15,000 for 100 shares, you're going to be able to get 100 shares for less than 10K. So I want you to start looking at it from that perspective too. When stocks go on discounts, now you're able to not just get these assets that you already wanted and that were overvalued. You never want to buy these names at the top. Why am I buying a name that went from 30 to 150 at the top? Just think about that. Reality kicked in and it set in faster because even September, everything about this last quarter, late third quarter and last quarter of the year was a little bit different this year, right? September, we was waiting on a pullback. September, we made all-time highs almost every day outside of September 2nd. October came around, market got a little choppy and then started to roll. So this is a lot more of profit taking. If people ask me the question, yo, LD, what do you think about this recent pullback? This is pure profit taking off the board. That's what it is. Names that were stretched, profits being taken off the board, and there's some great opportunities coming back into fruition. 2 stocks that we currently shorted this week. Another H ticker, Hims and Hers, right there at $33.62. You also have SMCI relatively here. So now SM Sizzle, let's come here, SMCI, and let's go to Hims. There we go. Take this. And so showing you the importance of using your diagonal trend lines as much as you can. There we go. Last time we came to this diagonal trend line was in April 24. If we break, we'll be breaking this structure here all the way back from September 2024. Now, SMCI, a really great price is where? Around 17 to 22 bucks. I would say for those that want an SMCI is 69, 60, 70, 80 up here. Really great price would be in demand around $17 to $22. So if you know you wanted exposure in the SMCI, knowing that one, they're a profitable business. They've had some issues in their past, but they've working to clean some things up. It's worth a shot at those levels. Once again, Hims was a name that everyone's talking about. Hims and Hers was the, darling of the year. That's what I call it, right? It was the most improved player of the year to some people. I'm telling you, you could probably get Hims at 15 to 20 bucks. No question. If we break here, Hims will be coming down here to 20 bucks a share. The question is, are the same tickers you was excited about at 60, 70 when they go to 15 or 20? Are you going to take a shot at them? Now, there's also going to be from this, what we want to call maybe disaster per se, right? There's going to be areas where I will say this, right? Some stocks will not come back. That's just how it goes. PayPal, XYZ, when the market has these corrections, some stocks do come back, but not all. And we experienced a lot of hyperactive trend trading, right? Where I always tell people when the list of stocks goes on Twitter, and it's on Twitter and it says, these are the 10 stocks that you should be buying right now. Usually those 10 stocks are usually going to be the 10 stocks that you should be selling. Not buying, but selling. You do it when things are hitting these mainstream and you hearing about quantum computing stocks and they're already up 500% or they're already up 1,000%. That is the time to get the hell away from them. I cannot stress that, right? I cannot stress that enough. That is the time to get away from them. So notice IONQ, just giving different examples. Apple's down less than 1%. Where's IONQ? Since October 6th, IONQ was at 80 bucks. Where's it at now? 40 bucks. Down 50%. Ask yourself this question. It is down pretty much 5 times what the NASDAQ is down. What I'll say is that these hyperactive growth stocks, you see, I created that from the beginning of the trend. Notice we bounced here in March and April. We pulled back here, bounced there. So this could be a reversal area. But if we don't reverse here, night, night, 35, 27, 25. And you can play with these names if you want to. But when these names lack earnings and revenue, by the way, I'm just going to show you what IONQ is earning. And all jokes aside, because I like IONQ, but I got to pick on them here. Sorry. Sorry, IONQ. Don't come after me. You're losing $5.84 EPS. This is why we don't need you. We need Apple, though. We need Apple. We don't need you. We don't care for you. We don't need you. You're a great instrument and a great tool, but guess what? You're irrelevant for us when the Fed says they're not cutting interest rates in December. You're irrelevant to us when now valuations are back in the focus and we got to sit here and see a blank. You ain't got no dividend. We couldn't have a dividend, right? You got no P to E, right? Because you're not even earning jack nothing. And then when I go to your statistics sheets, you're full of blanks. Trailing PE, well, you don't have no earnings. Forward PE, damn, you don't even have no forward projections. You don't even got an FY 2026 for me, do you? Oh, you don't, because we don't even have no numbers. So guess what? We're going to hit the SE double hockey stick button. Sell. So the moment there becomes a lot of fear in this market, the first tickers, and I always say this, I've been saying this at the all-time high to tell people, the first tickers to go is the companies that's not profitable and don't have no guidance for you. And the companies that get to the podium when it comes earnings time and they ain't got no earnings. This is why I stress this all the time, because we can see in a short period of time names like this in April can go from 20 to 80, but then they always come back down to reality. And people say, well, yeah, it outperformed the S&P 500 right now or outperformed the NASDAQ. For how long, though? Because you can do that for a nice 3-6 month period. You might even be able to do it for a year. But can you do it on a consistent basis? It hasn't been, we haven't seen it been able to be done. So like I said, I want to make these notes when it comes to, when it comes to looking at these tickers. Once again, super, 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 super duper important that I make these notes for you guys, right? So once again, capital preservation is very, very, very key. Preserving your capital. I cannot stress that to you guys enough. Preserve your capital from these frothy tickers. You buy these when there's extreme fear in the market. So let's talk fear now. VIX, everyone pull up the VIX. Uh-oh. VIX is about to get cracking. Also going to talk T triple Q because it came right at the right time, right? T triple Q is giving you, let's talk levels. We're going to talk levels and numbers. So the T triple Q actually, a couple things that the T triple Q did. Well, just one thing that it did. It did a split. So it actually made the price lower. So they actually did a 2-for-1 split. Now you think about that, a lot of times these leverage products, they usually do reverse splits, right? To have less shares. But here on T triple Q, you actually were given an extra share. So if you had 100 shares, you got 200. If you had 1,000, you got 2,000. But let's talk levels and numbers. And I think this is right on time. Funny enough, like a lot of things, things is right on time for the T triple Q to bring it down from a cost perspective. But let's talk VIX and areas of where it could go next. So the VIX next big boy level is $30. So I want you to put that down there. The next big boy level is $30, right? So when you look here, you have to see now if the VIX, if we break above 30, after that it'd be 35. Now we don't usually typically always see the VIX get above 30 and 35. 30 could be the rejection point. But if the sell-off deepens more, let's talk about the T triple Q. Because a lot of people are going to ask, well, L, where would you buy the T triple Q now? Right here in January of 2023, it was $8, but obviously they've done a split. So things have changed as far as pricing wise. Right. So I want to say this when it comes to the T triple Q. Ideally, you want to watch here at $38, right? So as the VIX, if we break through 30, the longer that the VIX stays elevated above 20, the more volatility that's going to. So today, the reason why today was able to even happen, right? So let me pull up the QQ, regular QQQ first. I'll bring back the T triple Q. When we were on live earlier and we talked directly about this, did we not say that this was going to be the rejection point right there? What you had right here, a DT, and a DT is what? What's a DT for my people that's in the building? My people that's here, what is a DT? What is a DT? Put it in the chat for me. Double top, double top, double top, double top. There we go. Double top, right? So now when we had this double top, what happened? Price pulled back downwards, broke through 596, 591, pulled down. Now here on the VIX, right, we're at 26. So when you're looking here, we want to watch that what? That 574 level. We've been talking about it. 574 level. Watch that 574 level. Now on the VIX, right here at 30, I would say that probably if we get above 30, that is where that NASDAQ correction zone is, right? Us getting above 30 is where the NASDAQ officially corrects at. We break below 574. Let's talk bear market. Not that a bear market is going to come, but let's just give you the levels so you know. So we don't even got to waste no time. 637 times 20%, $127. So that's easy math. That's 510. So there is no bear market on the NASDAQ until $510 a share. So we would have to come all the way here to 510, which would mark level all the way back from May. So that would be $510. Just to put that into perspective, that's how far away that the QQQ is from a bear market. So that's about roughly there. That's about $75. So still a good distance away from a bear market. Correction, though, is right around the corner. One more bad day and we'll correct on this NASDAQ. That's how close it is. So the NASDAQ is one bad day away and a VIX breaking above 30 away from actually breaking down. Now, what's the big domino? NVIDIA. And where is NVIDIA at? Right here at $180. So I just want to prepare people for this. Once again, a break underneath 180 and NVIDIA is going to go to 174. After that, it will drop to 169 and then 160. By the time, if let's say NVIDIA was to drop back, worst case scenario, to 140, 150 again, that would probably put the QQQ back down here around 540 to 550. So do keep that in mind, that NVIDIA's is pretty much going to control whether or not the NASDAQ goes into a correction, right? So I really do want to stress that to you guys. NVIDIA is going to control whether or not the NASDAQ goes into a correction, right? So all eyes are on NVIDIA for this correction right now. If, like I said, if we do break, once again, if we do break and come here to this downside, NVIDIA will cause the correction, right? So it will cause the correction here in the market, all right? So that's something, like I said, something to keep in mind here on NVDA, all right? So QQQ's pulled down 583. We also have 579, 577.67. So NVIDIA there, if we break underneath here, we're going to flush down 169, 160, all right? So keep those levels right there for yourself. So you should have those things down. VIX levels at 30. $30 on the VIX. Pay attention to the VIX, $30. $30 on the VIX. Should be good to go in that regard. Next stock we have is Netflix. And after Netflix, let's go solo. There we go. Lead the QQQ. So Netflix broke the diagonal trend line today. Notice there was a lot of stocks breaking this diagonal trend line. So take these levels down. I know I got some messages from people like, yo, L, you really think Netflix is going to go down as, 56 or 64 bucks? I don't really think so, but I do want to say that that would be a great price to get Netflix at. So if it came to 56, which would be equivalent to 560, you shouldn't be scared of Netflix being at 560, which is $56. It would be a great price to pick the equity up at based upon its valuation. So that's a perfect price. Netflix falling to $56 would be a dream come true. Now it did split. So a lot of times we do tend to see weakness after splits. Ideally, the 845, 860, which is around like 84 to $86, that would mean that Netflix would fall another 20 bucks. So another 20%. And I think Netflix becomes attractive, right? As a long-term investor, if you were able to get Netflix at a dropping, right, another 20%, I would say it does become an attractive ticker, right? It becomes attractive. The price is relatively attractive. You'll look at it and say, hey, I'm interested. At 56, you would no brainer. You wouldn't even question it. Your money would just be put into the stock there at 56 bucks. Right? So just put those prices down, 56 to 64. That's going to be your best price scenario here on ticker Netflix. Now, 56 and 64 may never materialize. I think likely that 84 to 86 is coming. Right? So I do want to put that down there. 84 to 86 is getting ready to happen. So I'm going to tell you that here now. Netflix is going to come and erase all these gains from April. I would like Netflix to come down there sooner rather than later. It is not a volatile stock, of course, right now because of its split. So that is something to take notes on. Next one, I love the stocks that people fawn over, because when people fawn over these stocks, I'm going to short the dog out of them, right? And so when you look at OKLO, we were talking about hims and hers and some of the other cuter names on the street. It would be hard to find a less attractive name. I mean, a more attractive name than OKLO in the past few months. OKLO, much respect to them, but it's going to be bedtime for them here in a second. And this is going to be a nice long nap. And when they wake up from it, they'll probably be down here at 40 to 50 bucks. OKLO is going to come and get crushed more. More pain is on the way. I want to let you know that. So this was a major trend line break here today. Broke this structure. Remember, this stock was just 60 bucks, not in August 2024. That was August 2025. So just want to put that out there. The only reason that OKLO broke above 100 was because of their high short interest. There was a day, and this is why you got to pay attention to the markets and know what you're talking about before opening your mouth. Let's go back. There was a $37 day to the tick. Once again, OKLO falls underneath the basket of, I got nothing to base your valuation off of. Your price, why are you priced here? You have nothing to show me. Blanks, 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 blanks. Shooting blanks. You were a company in September of 2024 of less than $1 billion. You were a small cap, less than $1 billion in market cap. I've got nothing. That is now a 16x. I've got nothing to evaluate you on. All hype. And this is why. Now the short interest has dropped. considerably because of the amount of people that got clapped on OKLO when it was shooting to 200. You had to close your shorts. But at one point in time, they had above 20% shares outstanding that were being shorted. So essentially, these shares were being taken, borrowed at this low price, and the stock price kept gapping up and forcing shorts to have to cover. The stock is down already more than 50% from its high. It's already down that much more. The NASDAQ has not even corrected yet. And now we're looking here at OKLO. If the NASDAQ is to correct, this thing will be a $60 stock again. No ifs, ands, buts about it. That NASDAQ, that QQQ come down there to 550, 560. You play with OKLO if you want to. This thing will be wet in the bed here at $60. You've got no revenues, no trailing nothing. You've got no even FY 2026 for me to base you off of. You went up off of all hype and no numbers. So there's some tickers, once again, there's a lot of these names that are really, 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 really good for you to use, right? 1 second. Right. So a lot of these names, once again, this falls underneath that basket. So OKLO is gonna come down there. I closed half my short position today. The rest of it, I'm gonna let it ride. We're gonna see. We're gonna see what OKLO is made of. I want to see this thing below $81. Right. So I closed half my position out of profit today. I'm looking to see OKLO get crushed more. Bedtime, please. Quick, fast, and in a hurry. Like I said, I would like to see this thing pull back a lot swifter. So it is not finished selling. Look at today, it's down 14%. Now, this is a volatile name because of the amount of people shorting it. Sometimes we see these huge upward swings very quickly and fast, right? Like I said. So I do think, once again, super, super duper imperative for me to touch on that. These wild swings that we do see come quick, fast, within a hurry, right? So OKLO again, coming down here to $73, $69, $64. So get ready for that to happen. Next thing to cover. Covered Netflix, got that. Let's talk METU, Meta, $26 a share. And let's talk Meta itself. So you look at Meta, METU to me, no brainer. I would be buying this name right now. Right? I think worst case scenario, Meta comes down to $20. Well, the METU comes down to $20. But looking at Meta, I think it's giving you enough of a drop, and with this METU to take a little bit of a shot at it. The perfect price is right there, like that $18-$20. Is like your perfect price on that thing. Once again, you don't always get your perfect prices, right? If I told you that you had a shot to get METU and it could double, right? You could double your money buying it here and taking Meta back to the all-time high as that happens over time. You definitely do have, like I said, a shot. I think it's worth a shot here, right? I do think it is worth a shot here. So I did want to bring this up to you guys, taking a look here. All right. Let's go ahead and bring this out. BTC, Bitcoin boys, Bitcoin boys, MSTR me. So let's talk about them. Bitcoin boys, 86K. So with Bitcoin, we're looking for 74K. MicroStrategy's at 177. BTC broke through 100K. Crushed. 100K to 86K. Broken down just in the past 2 weeks alone. MicroStrategy Past 2 weeks alone, this came down from essentially 260 all the way here to 177. So when you look at BTC, you got 83K as being your support level. Now, some people looking at 74, 73K. We can go back and forth on those levels all day. We won't do that right now. 147 is about to happen on MicroStrategy. Now, BTC is probably going to come down here to 100 and, what's I mean, BTC is probably going to come down here to probably, I would say, roughly about six. It could drop all the way to 66. I personally don't see Bitcoin ever breaking below 50K again. That's my thoughts and my perspective on BTC is I don't see it breaking below that ever again, realistically with you. So on Bitcoin, I don't see less than 50K ever again. MicroStrategy currently at 177. We're looking, depending on what you're looking at, 100 to maybe 120 bucks. This thing is looking to wipe us. Like this Bitcoin drop, the more that it falls, the more liquidations that happen. It's just going to bring the entire space downward. So BTC had better stay above 83K. Otherwise, it's going to come probably quickly down to 74K. Now, I'm going to spell this out for you right now. And if this thing happens, this is just my prediction, right? On how this thing plays out. This is just my prediction, right? So let me do that for you guys. Let me give you guys my prediction real quick. Here's my prediction. You guys know how I like to do. It could play out. I'm not going to toot my own horn. Some people asked me today and said I did say in the chat that the market would be negative and lose at least half of its gains by 12 p.m. It did happen. What I will say is that was just me flexing a little bit. I'll be honest. I was having a little fun. Today was fun. Outside of all the money's cool, but the impact's greater, right? Like the impact's greater. We got 242 people that's directly here on this Zoom right now. We got almost a little over half of about 50 people, 52 people watching on YouTube, right? Impact is greater. What I say about this, I get the most satisfaction from the impact, man. So when you guys execute, that makes me feel good. The more you guys pay attention, the more you guys listen, the more you guys take these notes, the more you guys execute, that makes me feel good inside. You know what I'm saying? So I'm proud of everyone that executed today. I'm proud of everyone that's just been executed all year, right? We take nicks and bumps. We come back better than ever. We dust ourselves off and we get up. And I just want to give everybody their flowers that's here on this Zoom right now, because this is what education looks like. How serious are you about the money that you have in this market? To not shy away. And once again, we don't shy away when a market is pulling back. We try to add more value to teach and say, hey, this is the part where you got to double down on your education. This is the part where, hey, you got to understand now, just don't go and take the tickers that's being put on Twitter or the tickers that's being put on a reel telling you to buy, and you just buying without looking at their fundamentals. This is the time where you open up that Yahoo Finance and you pull up and say, yo, that was on me. I got to take some accountability. I was just buying names off of prices, no value. Right? So I want to give everybody their flowers here today and tonight for being here on a consistent basis, right? This is what it comes down to, the education. Because this takes the fear out of it. Someone asked me a great question today. How do you get over the fear complex? When you can explain not just a win, but could you explain a loss? Could you explain what went wrong or what went right on your specific trade? You should be able to tell me, yo, this is what happened. Yo, Bitcoin came down, boom, broke this 100. Now you understand with this trend line, you have a technical understanding of saying, hey, Bitcoin invalidated the trend that it was set on since August 5th of 2024. It invalidated that trend. So now it takes away the question, because now you're not really questioning, you understand Bitcoin not just broke 100K, but it was at 98K where it invalidated that trend. So that's like I said, the bulk of things that you should be looking for to having, once again, the quality information, quality and substantial defined information. Like I said, very, 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 very important, right? So you look at MSTR here, you see that same thing correlated with BTC. Let me give you guys the play. Now, some people, I don't even have to say the prices because we already gave the prices, right? What's the price that you should get ETH at? We're going to see who's been paying attention. What's the price you should get ETH at? I ain't even going to say nothing. ETH, Ethereum U. Caven just dropped in for Ethereum. Yep. $20, 20 bucks. Seeing 20. There we go. $20. 22 right there. 2022. There we go. I ain't even had to say it. Y'all already knew it. Ethereum is right here at 2,800 bucks. At 4,800, yo, everybody wanted it. Right there, ETH, 2x levered ETF of Ethereum. Right there, just pulled back into the zone. Had a pullback zone right there at that level. Y'all see that pretty much plain as day, clear as day right there for everybody there. Right? So ETH came down, of course. So now, what's next? Well, now we're going to take a look here. And what I want everybody to be able to see is two things. I want you guys to get ETH at 20 bucks, 20 to 22 bucks. That's where I want you guys to get ETH. 20 to 22 bucks. That's where I want you to get ETH. Is everybody on one accord with me there? On ETH. ETH, Ethereum U. Any questions? Questions. Do. Questions. Any questions from anybody on ETH at all? Good value right there. ETH. All right. No questions on that. Ethereum currently at $2,800. Want to point a couple things out. I want everybody to pull up Home Depot. Unfortunate. I wish this wasn't the case, but it's happening. It is happening. There we go. I want you to pay attention to Home Depot real quick. Let me see here. Home Depot's at 332. So on Home Depot, when you are looking at ticker HD, Home Depot, right now, 773 for Goldman Sachs. Right? So for Goldman Sachs, when you are looking at this level, Goldman Sachs, 773. So we want to watch out for Goldman, right? So right there on Goldman Sachs, 773. Watch that level underneath that. We're going to be breaking down right here to 737. If that happens, the DIA is going to pull back. So I would suggest that if the selling moves over into the banks, we are going to see a more of a move downtown. Yep. More of a move to the downside. So DIA, Home Depot, which is a high asset allocation ticker within the DIA. When we pull up the DIA, we're currently here at 458 and 10 cents. So 458 and 10 cents is where we're at here on the Dow Jones Industrial Average. Also here at 773 here on Goldman Sachs. So 773 on ticker GS on Goldman Sachs. That's where we're at. right now. So 773. Ticker Goldman, right? Goldman Sachs 773. So yep. The pull down would definitely be, like I said, very, very, very sharp. On the DIA, levels at 454 and 451. So those are your levels on Goldman Sachs. Let's pull up Just Print Money, which is JPM. Just Print Money, JPM. 298. Watch it. This stay below 290. I want you to put that level down. Below 290, Goldman Sachs and Goldman Sachs, you had a level, but JPM and Goldman Sachs both collectively together can pull back here to the downside. So the banks, if the selling moves over to the banks, you will see a move as well here on the downside. So definitely look for this. Goldman Sachs, JPM, and the DIA. We're already back to 45,800 points. We very well could head down on the Dow all the way to 43,000 points. So there's still that level 433 is the level on mine for me. That July level right here, 433. I'm interested to see from a structure standpoint, because if we are to break, we're set right here. Money needs to come in quick, fast, in a hurry. So we're right there on the DIA, right? The Dow Jones Industrial Average, looking like we're about to break down and go take a nap here on the Dow. So the Dow can fall another 3,000 points. Let me make that clear to you guys. 3,000 points. So do not miss it. The Dow, like I said, can fall another 3,000 points here right now on the DIA. All right, 3,000 points. Led by a fall of Goldman Sachs, JPM, Home Depot, right? I didn't even bring up Caterpillar. But we're going to bring Caterpillar up right now. Cat is hanging on right here to this 545. Now, Caterpillar's been able to hold on better, which is good, but it's still Caterpillar could be in a little bit of trouble. All right? Yep. Any questions from anybody? Questions? It's 9:53. We worked overtime today. Appreciate everybody being on. I know it's getting close to bedtime. So we're going to make sure everybody is well rested, and we'll be back. I know next week is a holiday. So a good question for people. Does the selling continue in the next week? I think that I know the volume is going to be lower next week. So do keep that in mind. Thursday and Friday. Well, Thursday, there will be no market. Friday will only be a 4-hour day, I believe. I got to check that again, but I think the markets close at 1 on Friday, right? I mean, do need to double check that, right? So, yeah. Any questions? Questions before we get out of here. Yep. Yeah, they close at 1. Perfect. Yep. That's just off my reconciliation. So, yep. Do. Any questions? So we're gonna wrap this thing up. Someone asked me, would it be better to get out of some long-term positions? I would say if realistically, if those long-term positions don't have good valuations, I would definitely say yes. I definitely would say yes, for sure. If they don't have good valuations, it would be a good time to get out of those names. I agree. So, yeah. All right. We'll wrap this thing up. So I appreciate y'all. Cut half on OKLO. So I did cut half on OKLO. We're holding the other half. So, yep. So appreciate you guys for